Welcome to episode 2 of Bull and Bear, where we give a quick but detailed breakdown of a position that we feel would be a good investment. So we're going to start off today. We're going to be talking about Spotify. So Spotify, you probably all know what it is. Maybe you guys use it. It's a streaming service for music and podcasts. Unlike some of its other competitors, its big one in the U.S. being Apple Music, Spotify starts off as free, and the only thing you have to worry about is you're going to have ads, but that's going to make Spotify money anyway. So a lot of people do use it for free. But unlike its competition, Apple Music doesn't do a free type subscription like Spotify does. It's a $10 a month fee. The only thing with that is you're not going to get to try it out before you have to pay for the subscription. So that's one of those things that I like about Spotify is it kind of gives its consumers a free trial before you have to pay for it. But with that, they are making money off of the advertisements, of course, and then they're also making quite a bit of money off of subscriptions, and I'll get to that in a second. But a company started out in 2006, is started in Sweden, so they have a big European background, a lot of listeners there, and it's definitely flooded into the U.S. and into Latin America. And all those numbers continue to grow year after year, as you can see from like different graphs and stuff if you want to check it. I did a little bit of research earlier, just looking over some of the graphs, and the numbers are definitely going up year by year. And there's a lot of detailed background for that you can look at if you want to invest. But it started out, a lot of you guys probably don't remember a little thing called Napster. It's like an illegal downloading of music, and everyone needs to do it on their laptops and stuff like that. And at the same time, Apple had their music, but you had to pay $2 for every song. So there wasn't really anything in the middle, and that's where Spotify took over and tried to build a business model based off of both of those things. So they wanted you to be able to download music, but you wanted it to be cheaper. They wanted to give you all these different options and things like that. They really filled a role that wasn't really there yet for the music space. But since then, to date, they have over 248 million monthly users, and 113 million of those are subscribers. So they're paying the $10 a month just so they don't have to use those ads. They can download music so they can listen on the go, don't have to use data, things like that. And year over year, over the past 5 years, I believe, they have had 31% growth each year, roundabout 30 to 33, but 31%. In my opinion, they have a larger market over Apple Music, which is, like, again, like I said, their number one competitor. But that's realistically because they can be on any product, not just Apple products. So one of the big things is not everyone has an iPhone. So you can use it on Android. You can use it on all those other types of things. As well as that, you can use it on an Xbox, a PlayStation, on any type of computer. And I think that's where they really stand out. So you can play it on in the background with any kind of device, not just an Apple product. And as well as you can use it on Apple products. So they're kind of double dipping there. The only thing that I saw that I wasn't a huge fan of, but honestly, it's going to affect them pretty well, and they're going to do well in the long run because of it, is right now they are not profitable. And over the past 2 years, they decided to just spend a lot of capital to try and grow their podcast space. And I can see why, because it's huge right now. Podcasts are growing. They just inked a deal with Joe Rogan, who you've probably heard of him. He has number one listened podcast in the world and has for like 3 or 4 years now.
Oh, yeah.
But they just inked a deal with him, so he'll be exclusively on Spotify, which is
huge
for them.
Yeah,
huge, absolutely. And they're going to be trying to get, obviously, more deals like that. It's kind of like a Netflix model, if you want to think about it that way, how Netflix has their own Netflix originals. So they're kind of following that same business model, like I said, and it seems to work for Netflix, so I don't see any reason why it couldn't work in the podcast space for Spotify. And, of course, that opens the door for other opportunities down the road. You never know where they're going to go, but they seem to be doing all right, considering over the past 5 years their profit has quadrupled, which is something that is not necessarily something you hear every day, how a company is being able to continually push profits year after year. I know that they're not currently making money because they're spending to make more in the future. So right now, before all of those deals come into place and before they start pouring in money, I think right now is a good time to invest before it hits on the other end and that stock price rises really quick. But that's all I got for the bull. Still, he's going to hit you with the bear real quick.
You almost convinced me there. I almost maybe forget about the negatives. Guys, this is definitely a growth play. This is not anything defensive. This is very speculative. So, with that, starting off with our bear case here, the company has had significant growth since its IPO in 2018. But as he mentioned, with the growing top-line profits, which are gross profits, we also see a growth in expenses, which is not necessarily something you want to see in a growth play like this. So what does that mean exactly? The cost of running their business essentially is getting harder as they are scaling. The huge deals they're signing is costing a lot of money, and this is something to take note if they don't take off and they aren't popular in the future. So as he mentioned, I think he mentioned they're taking like a Netflix route and trying to have massive scalability, especially in the Android space as well, and worldwide as more people get exposed to smartphones worldwide in third world countries and whatnot. But acting like Netflix, guys, is very risky if you do not have a good management team, okay? Netflix was very successful because they were innovative. They saw a space that they could destroy Blockbuster in, and they saw the future, basically. Spotify, on the other hand, podcasts are not new. This is something that they need to rebrand and kind of entice people to come into their platform by having exclusive podcasts. They're not making anything new, guys. So that's very important. So this could work out, or it really couldn't, because they're not as big of innovators as Netflix was, in my opinion. Another point, Apple Music. Like he said, not everybody is an Apple phone user, but the majority of people do use Apple products, and this really takes away a lot of market share from Spotify. Granted, yes, I will admit, some people who do have iPhones still prefer Spotify. I will admit that, but a lot of people that I know do like what Apple Music has to offer, and it does take away a lot of market share from them. So that's something to consider as well. Another point we have here is the Joe Rogan podcast, right? He talked about how that could be a great play. Well, on the flip side, let's say that, as we've seen recently, some of the more controversial shows are not on Spotify for Joe Rogan, which are some of the most viewed shows from Joe Rogan. So content could be left out, you know what I mean? People could have mixed reviews. They might not like the exclusivity of it. There's a lot of moving parts here, and I'm not sure how this is going to pan out long term. But what you got to keep in mind is they're really betting big on it working, guys. They slipped back into unprofitability in 2019, betting that this podcast thing would work out. So I think they took an unnecessary risk personally, but you could see huge upside potential. So that's something to consider as well. Another thing, along with unprofitability, they don't have a current price to earnings ratio. So you're banking on the fact that them being able to scale their business will pay off big time. I'm not saying this is a bad thing. If you truly believe in Spotify's management team, this could be a great play for you. But I only see them having a track record of, 2 years on the stock market. And for me, I need a little bit more time to be comfortable in this one. And I'm not sure if they can pull it off yet, personally. One of the straight up business aspects of this that I don't like are their royalty payments. So moving into this point, it's important to note that Spotify pays record labels to have their music on their platform, right? So regardless of my opinions on Spotify, we need to just look at the straight up numbers. For every dollar that Spotify earns from streams on their platform, 75 cents is paid to record labels. So that's not ideal. Some other streaming platforms could have lower margins than this. If they could fix this in the future, that would be great for their business model. But right now, I think they just need to really work on improving their margins, and that could be something to consider as well, because they're not having very great margins on their streams. Last point I'm going to make here, guys. you guys know how Spotify works. As he mentioned, the free thing could be a great incentive to maybe draw people in. But what we're seeing is that a lot of people are content with using the free thing. So they may never go to subscription based usage on Spotify. It's great that they're drawing in more users, and it's a clever tactic to maybe get them to upgrade to the premium side of Spotify. But if they never end up giving Spotify any money, they can't really benefit off of them using the platform. So that's something that I'm not a really big fan of, but is great for, everyday people who just don't want to pay for something, I guess. So but when you're investing, you got to take into account what the company's actually taking in revenues. So that's the end of the bull case. That's just some things to consider. I don't think Spotify's a terrible company. I just think it's a little speculative, and that'll do it.
Yeah, and at the end of all these videos, we're always going to give the transparency update. Vasily is more of the hold for long term, see genuine growth, maybe make some dividends. So this probably isn't right for him.
No.
I don't mind taking a risk every now and then, and I see over the next 2 years that, me personally, I see that we can make a little bit of money. So I'm going to probably put in some fractional shares because I'm a broke college kid and can't pay the $240 price or whatever it is today. So I'm going to probably put in a little bit on it and see if it can grow. But then again, we're not financial advisors. We're here to help you and to honestly help ourselves also, and just trying to learn more as well as teach it to everyone that we can. And finally, of course, please like and subscribe.